Hi, this is Mark from Altcoin Buzz, and today we're going to take a look at quite a few coins. We're going to try and get through them very quickly. Try not to take more than 10 minutes on the summary of all these coins, but give you enough information so that you feel like you've got some basis and foundation. And by the way, there are some real big things we need to look for on Bitcoin coming up, and I'm going to share those with you. So let's get started. All right, let's start off on XRP, and the reason I'm adding in XRP again is because we had a big discussion in the Altcoin Buzz chat room about XRP and where we thought this was going. Right now, if we look at the 14-period EMA, and I'm going to zoom in here a little bit. This is on the logarithmic chart, but if we look at the 3-day logarithmic chart, this pink line is the 14-period EMA, and has acted as resistance on XRP since back in November. So you have that pressure going on right now. We've touched with the 7-period EMA, which is this red line, a few times and been rejected from there. It looks like we may be again. We've got downward pressure and momentum from all the other higher exponential moving averages. And the momentum, along with the volume, are really kind of struggling right now. You can see the momentum starting to slow. We're trying to find support on the stochastics to regather strength to potentially test up again against the 31-day EMA. But basically, this trading range is where the support and resistance lies. This is where the point of control is. So you don't want to see XRP drop below that point of control, which is roughly around the 30 to 31 cent area. 27 cents is the lowest level of support on the 3-day chart, and that's down in this, you can see this double bottom that happened right around that 27 cent price point. If we break below this point of control, that's going to be the first level that we look to see where it reacts to. But really the 24 cent range would be the next logical target on a breakout. We don't have a whole lot of trading action past this 27 cents, so a break of that takes us quickly down into the 24 cent range. Momentum indicators trying to regather strength, although weak. This could be a very solid support area for XRP, but I'd want to see a break above the 32 cent price point, a nice close above there to be more bullish on XRP. Okay, let's take a look at Stellar Lumens XLM on the USD 1-day chart. We're getting a little bit of a pullback. Still in this range that in the red box, that's where we want to stay in that range and find that support within that box. That could be tested down at the 10 cent area. If we break below that, it's likely that we'll come back down and retest this 9 cent area for support, but that would take us below where we were trending, this blue trend line, this horizontal resistance line that we were trending along, and we broke through some nice bullish crosses on the moving averages. So if we can settle back in here on this retracement, find support in this area, you could stretch this box down right into this range, right at about 10 cents. If we just drop below that, then we'll be getting nervous because a break below here, a break below this prior high of 9 cents just continues us down this path. Now the momentum looks decent on the daily chart. The volume's still above average. The next resistance level is around 12.5 cents, which would also be the target on a measured move if we just took the base of this flag right here and this ends up becoming a bull pennant, a bull flag. That's about a 30% move up. And if that breakout comes in here somewhere, settling back in and support, the 30% move up takes us somewhere around 13 cent area, 13.5 cents, which is coinciding with where we had this top back here. So not concerned if XLN comes back down and finds support right here in the bottom of this box, right around 10 cents, and then comes back up to try and retest this prior high right here. The only thing that I would caution is Coinbase coins, newly listed coins, have a habit of doing this, making a nice little run and then just crashing through. So be conscious of that, because if we do break below this 10 cent area, we're going to look to see if we can find support back here at this previous high that we just made at about 9 cents. Okay, let's take a look at Enjin. This is a coin that's been on fire. And if we take a look at this chart, this is the Enjin USD chart. It's on the 12-hour chart just so we can stretch out these candles a little bit. The 1-day chart, because it's such a young coin, really doesn't show us as much as this does. We've been making bull flags up, at least one, and now looking at potentially a second one to move up into the next level of trading. The only thing that's concerning to me is it is now closing below that 7-day EMA, and it's got declining momentum. Now, if the Fibonacci 161 holds, then a rise back up to the 261 would mean a 60-cent Fibonacci target. And that's also the measured move if we break out of this flag and it becomes a bull flag. So let's just take a look at both of those things. If we break out of this flag, let's just say this is the base of the flag down here. If we come out of the base of the flag here, let's just call that the base, and come up to here, we've got a 211% increase. A 211% increase if we settle in on this 14-day exponential moving average. So let's just do a measure move from here at the bottom of this. We'll call this the bottom of the flag, up to the top of the flag, which is the close here, at about 190% increase. If we go from a breakout, and we'll just say from the 14-day moving average, or the 14-period moving average, or 190% up, it'd be roughly in the 50-cent range. This is also basically the Fibonacci that we've been, that we talked about just earlier. As we look at the Fibonacci, we came from this previous high down to the low and came back up into the 261 range. And that's where we settle back in on the 161. Now, if we come off that previous low to this swing high, we have basically a top at the 261 again and a settling at the 161. So if we play through on this Fibonacci again and come up to the 261, the 261 sets in up here at 60 cents. With a retracement back to the 161 to 40 cents. A rejection at 27 cents right here would be a double top here on this chart. A break below 16 cents with a bear cross of the 7 daily, which is this red line right in here, and the 30 EMA, which is this kind of off red line back in here, would be a confirmation of a bear cross, and we would continue down from there trying to find support in this area somewhere around 9 cents. Okay, let's take a look at Bitcoin. There are a couple things that are very telling on Bitcoin right now that we really have to watch. They're super important. And one of those things is where we're lining up on the Fibonacci compared to 2015, right before the 2018 bull run. We're going to take a look at that on the Fibonacci. That's pretty telling, as well as where we've struggled on some moving averages with Bitcoin that could indicate that a big drop is on its way. So let's take a look at a couple of those things. So let's start with the Fibonacci. We're looking at Bitcoin right now on the 5-day, basically a 1-week chart. If we look at this and say we had a very nice rise up, very much like we had in 2017, right here, and then dumped back off and fell about 80% from that prior high. And we do a Fibonacci on that. Here's our previous low back in here. We hit a high, we closed, we'll just call it right in there. And where we end up is, this is just rough, but we end up trading, coming down and trading and finding support at the 786. Now I'm going to transfer this over to the current charts, and we're going to take a look at where we're at right now. So now if I take and go on the baseline of where we broke out when this trend really went on the upswing, and that's back in this area, back in 2016, and we started kind of going up and never looking back. And I go to the top at about $19,000 where we ended up having some closes and openings right in there. That was the peak of where Bitcoin was at. You can see that right now, the 786 is a resistance level for us. It's not a support area like it was way back in here. So that becomes concerning. Now, this is not precise, but theoretically, we are hitting resistance at that 786, not finding support there at the 786. Here's the other thing that is concerning to me. Now, I did switch over to the logarithmic chart here, but it would be the same scenario if we were looking at the price action. Here is the thing that is very concerning. If we take a look at these moving averages, what we see right here is this green exponential moving average, which on the 1 day is a 128-day moving average. And you can see that we've hit the top of that 128-day moving average and been rejected from it all through this bear trend. We have a rejection of it there, roughly $11,000. We have a rejection of it here, roughly $10,000. We peak out above it right here, but it's not a sustained move, and then break through back here. Another rejection right in here at about $7,200. We don't even have a chance to get rejected right in here. This is that big dump that we got from the $6,000 level. And look how close we are to it again right now. That is very concerning. Looks like we might get a bearish cross on the 7-day across the 30-day. Again, on a collision course with that 128-day moving average. If we take a look at the RSI and moving averages combined, we've got this area back in here where we were just chopping around very close or below that average. And that was when we were consolidating and trading sideways for so long. And then we broke to the downside with this capitulation. Bounced off the bottom. This is basically the previous bottom that we had. Bounced off the bottom to get a reaction bounce, rejected to regroup, and then come to the top. And now we're finding ourselves at the top, but really no action, price action above our prior highs. So this momentum is not looking encouraging as we start to top out here. Now we can trade sideways like we did here for a while, but we're going to be trading sideways at the top of this overbought area on the indicator. So all of that combined is enough for me continuing to be bearish. I think it's highly probable that we need to drop into the $3,500, $3,600 range to retest that area as support. If we do test that area as support, we're falling into this potential pattern of continued resistance. Break below here, end up having resistance here at our descending resistance line that we just broke out of, and potentially find ourselves trading down below and back into this range. Previously, we were talking about this potential for a head and shoulders forming. I said it, I thought it was weak. I think it's even weaker now as we get this continued choppy action in here. And so all things considered, I can see us breaking below to the downside with the desire to try and test this $3,000 range again as support. Hey, that'll wrap it up for today, and hopefully you got something out of this. A lot of excitement coming into the market right now. All kinds of volatility ready to happen. Don't forget to follow me on crypto_old on Twitter for those TA reports as I make them when I don't have time to make videos. Also visit us on Twitter at altcoinbuzz.io, Instagram at altcoinbuzz, and at our website altcoinbuzz.io for all kinds of great articles throughout the day. Until next time, may all your trades be good ones.